Good afternoon and welcome to Value Line's professional webinar series. My name is Jason Weisberg. I'm the Executive Vice President of Sales here at Value Line, running our institutional division. You are logged into a webinar that is part of our monthly series for our professional customers and prospective customers. We're going to cover today's topic is one stock to buy and one to avoid. Usually our most well-attended webinar. We try to give this webinar once every few months just to talk about, again, one stock we like and one stock that we do not. So before we begin, just a couple of housekeeping items. The webinar runs maybe about 20 minutes or less. I try to keep it to 15 to 20 minutes. If you have any questions, you can submit those via the chat or the Q&A feature on the WebEx platform. If you don't get to you today, we can answer your questions via email, which I'll show you at the end, how to submit a question via email to us or contact us in general for anything else you might need. Those who are new to Value Line, welcome. Just a quick background. We've been in the business 85 years, covering all different asset classes of research, to equities, options, ETFs, mutual funds. We're based in Midtown Manhattan on Lexington Avenue. Soon to be moving our corporate offices in early 2017, which we're very excited about, still in Manhattan. And again, our bread and butter is really our quantitative ranking system, our 1 through 5 scale that we have had in use for, well over 80 years. So let's dive right into it. Today, as I've kind of done in the past, as I mentioned, I'm going to present two stocks. One Value Line's research department is particularly bullish on, and one that thinks our professional clients should avoid because the risk-reward scenario appears unfavorable. In addition, as I discuss these stocks, I'm going to show you using Value Line's website platform how to efficiently and quickly use our products to make confident investment decisions. So for the formal presentation, I just want to take a moment and give a brief overview of the economic situation, much as our Value Line Research Department's view is of the stock market. These comments were prepared by Harvey Katz, who is Value Line's chief economist. So the economic pieces appear to be falling into place as the old year winds down. At the point, retail and housing demand remain largely positive. Consumer confidence is gaining strongly, along with stock prices and home values. Thus, it is not hard to envision the economy, which grew by an upwardly revised 3.2% in the third quarter, gaining 2.5% or more in the current period. Solid advance would enable an up and down 2016 to end on an encouraging note. So Christmas spending is likely to be fairly strong in our opinion, and expectation is one of the reasons for our evolving optimism on the final 3 months of 2016. To the so-called Black Friday event, which often begins on Thanksgiving Day, and which in 2016 is likely to have been decent but not exceptional, is now less of a gauge than it was, as a number of retailers start their sales in early November. What's more, many shoppers now do their buying online, by avoiding the in-store rush. Most point to a good online showing this year. There also are some issues that need to be resolved once the new year begins. Notable in this regard will be the likely changes in tax policies, the magnitude of the suggested increases in infrastructure spending the new administration will pursue, and how much of this talked-about program may be enacted by a Congress that also is likely to focus on keeping spending under control. And meanwhile, interest rates, they're going to need to be watched, most notably the 10-year Treasury note. This is on the fixed income vehicle, which is used in setting home mortgage rates, has gone from less than 1.5% during the summer to under 2.4% in the days after Thanksgiving. This yield reflects forecasts of higher infrastructure spending in 2017 and 2018, and the likelihood the Fed-initiated interest rate hike will happen this month. The yields, meantime, may prove problematic for stocks if had much above 2.5%. However, the bulls have been getting the benefit of the doubt as the key indexes have risen to a succession of all-time highs in this post-election run of optimism. We caution, though, that red flags will be raised if rates continue rising or if OPEC can make a deal stick that would produce the curb need to drive oil prices notably higher. The fundamentals are largely supportive, but rates and oil prices will bear watching. Some prepared remarks by Harvey Katz, who again is our chief economist here at Value Line, what we think about the general state of the economy, if you would. And now we are going to, if you look on your screen, we're going to jump into the Value Line paid platform used by thousands and thousands of professionals around the world. And we're going to focus on one stock to buy will be our first conversation. So let's move on to that recommendation. Right. So, Value Line's flagship product is our Value Line Investment Survey, also known on our digital world as a Pro Basic. It's offered in print and digital form. The bulk of the product consists of analysis on approximately 1,700 of the largest, most actively traded stocks in almost 100 industries. Each stock is tracked by Value Line's research department, made up by more than 70 analysts, economists, and statisticians. So of the 1,700 stocks, we think our professional subscribers should consider Amgen, whose ticker is AMGN. I'm just going to pull that up right now on the screen. Type in AMGN in the box on the top right-hand corner, clicking on the name of the company, and up will pop the digital report. Let's talk a little more in depth about Amgen and what we think about this company. California headquartered corporation is the world's largest independent biotech medicines company, in more than 17,000 individuals, and a market cap of more than $100 billion. Why the research department has chosen Amgen is that the stock at this time appears undervalued. And that's really the key here, is the undervalued opinion of the stock. I'll just pause for 1 second, just another housekeeping note. WebEx has been a little sticky, so if the audio happens to go out, in other words, if you don't hear anything for a moment or two, that's because I'm reconnecting. I'll announce when the webinar is over, so if you hear some silence for a few moments, that means something went wrong, and it's connecting the audio. Let's go on more about Amgen and tell you why that we like it. We're going to take a look at the summary and index. So if I go over to dashboard feature here, look on your screen. The dashboard can be found up here on the top right. Dashboard, and then we're going to take a look at the summary and index, which can be found under the quick links right here. The summary and index report comes every Monday. Finding bargains in the market right now is challenging due to the fact that the major indexes are all trading near their all-time highs. Illustration of the market's elevated nature can be found on the front cover of the report you're looking at right here, the summary and index. That cut, again, every Monday is released on Monday mornings around 8 o'clock Eastern Time. You can see in this box to the left here as I scroll up a little bit, and I'm going to click it right here. The price-to-earnings ratio for the 1,700 stocks in our core universe is approximately 19.3. This is notably higher than during the market's August high, as well as where it was 26 weeks ago. And the market's PE is almost double what it was market low in March of 2009. Figures calculated and updated every week, and we recommend that you consistently check this ratio to get a good idea of how the market is valuing the 1,700 stocks that are under Value Line review. Again, every Monday around 8 o'clock Eastern Time, you can pull up the summary and index report and see this PE ratio number. So further down on this S&I report, if we look a little lower, you'll notice in alphabetical order the industries that Value Line tracks. As I mentioned earlier, Amgen is a member of the biotechnology group, and that industry is currently ranked 29 out of 99. And if you look on your screen here, you'll see right here is a biotech with 29 in bold. That number 828 is actually the page number of our printed publication, where you find that industry report. In simple terms, the biotechnology industry is ranked in the top third of all groups for year-ahead relative price performance. So take a look again at Amgen's digital stock report and how it measures up to compared to the Value Line universe. Again, to access that report, you just go up to the top right-hand corner of the screen. So I'll close this down, and on the top right-hand corner here is a white box. If you go right there, I'm going to, again, go in here, type in the ticker, AMGN, wait for the company to appear, click on it, and up in a moment will come the digital version of the report. So sticking with the PE theme, right back in a moment, you're going to notice in the banner area that Amgen's trailing 12-month figure is 12.8. Its PE of 0.77 shows that the stock trades well below the broader market as a whole. And I apologize for the delay. Here we go. So again, let's take a look. Relative PE 0.77, PE 12.8. This is the banner area that I'm referring to when we're looking at those numbers. The next attribute that may jump out at you is the timeliness rank. As mentioned, the biotech industry is well ranked, but Amgen individually is expected to lag the year-ahead market according to our proprietary ranking system. Typically, the research department would not recommend a stock ranked at number 4 for timeliness. We see right here. Okay. They are making an exception. Amgen possesses so many other fine attributes. Let's now take a look at how Amgen has fared lately. So if we look at the valuation module, if I scroll down, and right here, the valuation module, let's get centered here. This module displays many years of financial results and stock price performance. It's most helpful in displaying how those financial results, good or bad, correlate to the issue's price action. Bold figures, if you're looking on the right-hand side, right here, anytime you see a bold number, that's our estimates and projections. That's proprietary estimates and projections, not consensus. 1, the 2, and the 3 to 5 year estimates based on all the categories here on the left side. The figures in, let's call them normal font, are as reported numbers. So, looking at the gold line in the graph at the top now, we're going to move to. So we're seeing here, gold line. Notice that the stock price has declined significantly over the past couple of months. I think that this drop has created a good entry point. And for more information, we're going to leave the digital report and take a look at the Value Line's PDF report for Amgen. Again, on this chart here, the gold line, I was going to show right here specifically, it took a little dip. We'll leave the digital version, as many of you probably are well aware of, the one-page PDF version of the report. Take a look at that. And we're going to look at a little more information in a different format. So this is also just a mention here. The PDF is the report that the financial professional, the advisor, the portfolio manager can take and send out to their clients. As an institutional subscriber, you have the ability to share this report with your clients, and this PDF version is usually the one that's used to do. If I scroll down here in the PDF, we're going to take a look at the commentary section. Right here. I'm going to circle it here. In the commentary, the analyst Neera Maharaja had something to say about Amgen's prospects. Amgen is on track to record impressive results in 2016 and 2017. The technology company posted solid year-over-year sales comparisons Sorry about that. As I mentioned earlier, the WebEx sometimes is a little sticky. So what we were saying is we were talking about the commentary from analysts who wrote this report. So the biotech company posted solid year-over-year sales comparisons to the first 3 quarters, and we look for that trend to carry through 2017. Although product sales have been a mixed bag, heightened demand for medicines such as Sensipar and Prolia also declines for other products. And diverse and vast portfolio should facilitate top-line growth in the mid-single-digit vicinity in 2016 and next year. Based on Amgen's current operational trends, we have slightly increased our share net estimates for the year and 2017 to 11% and 8% year advances, respectively. Healthy growth, cost-cutting, and share repurchases should buoy the bottom line. Right, we're going to jump back to the digital version. And lastly, I'm going to take you back to this version of the report in digital format. In the banner section, you're going to see Amgen is trading for around $144. Let's see here, based on that, at last price, $145.11. Our 3 to 5 year projected target range is 210 to 255, which is here. That near 3% dividend yield suggests that the total return potential is quite excellent. The fact that Amgen carries our top rank for safety, you can see right here, number 1 for safety. The risk-reward ratio is rather impressive. All told, the research department considers Amgen to be a core holding, one that should fit nicely in most equity portfolios. That concludes the one stock to buy section. So, as promised, let's talk about that one stock that our research department feels you should probably avoid. That is Domino's Pizza, DPZ. If I here and type in TBZ, click on Domino's Pizza, we're going to pull up the digital version of the Domino's report, and here it is on your screen. Domino's shares have been on a sharp upward trajectory for several years now. More specifically, the stock price has advanced about 400% over the past 5 years. For comparison, the S&P 500 index is up 90% over the same time frame. So you already know Domino's is the largest pizza delivery company in the United States based on reported consumer spending, second largest in the world based on number of locations. It operates more than 380 company-owned and over 12,000 franchise stores in all 50 states and in over 80 countries. Domino's also operates dough manufacturing, vegetable processing, and equipment facilities. We're going to take a look at the ranks module, and I'm going to expand that for a moment here. You can see, according to our proprietary ranking system, Domino's is ranked a 4 for Thomas, and thus is expected to lag the year-ahead market. By extending this module as we just did, you can see how Domino's stacks up versus its industry competitors. Unlike Amgen, where its industry contained many well-ranked stocks, most restaurant issues are untimely, with only 2 stocks holding favorable ranks. The Valiant's research industry currently includes 28 equities and is ranked number 84/99. And that we were talking about, I'll circle it on your screen. You come to the area here, your mouse, it'll come up Cracker Barrel, Dunkin's, Jack in the Box, Texas Roadhouse, and so forth. From a financial perspective, I'm going to discuss in depth in a couple of minutes, Domino's has performed quite well, and its prospects appear solid. However, the research department simply believes that the stock is overvalued. So let's listen to the difference, right? Domino's overvalued, Amgen undervalued. And we were surprised to see Domino's profit taken in the near future on the stock. What if a market correction were to soon occur, Domino's may get harder than the average stock on account of its lofty PE multiple and only token dividend. It's less than 1%. To look now at the 3 to 5 year projection module. So we're going to close that down, and we'll expand on the 3 to 5 year projection module here. In this module, Value Line is estimating that Domino's Pizza shares have, for the most part, already reached their apex. The current stock price is about $168, which is just below the high end of our projected 3 to 5 year target price range. For the value median appreciation potential for the 1,700 stocks under our review, currently 35%. Also updated weekly on the front cover of the S&I report took a look at before. Let's take a look. We're going to shut this module down. We'll open up the PDF version of the Domino's report. Now, looking at our classic PDF version, it's going to show Domino's appears poised to deliver healthy share gains over the next few years. However, as you can see in the graph, and the graph I'm referring to right here on your screen, Domino's price is trading well below the cash flow line, or value line, as is often referred to. What Value Line analyst Richard Gallagher projects that although Domino's profits will continue to advance at a good clip, the stock will be afforded a far lower PE ratio, on display in the 19 to 21 projections column. Okay, again, if I scroll a little bit up, and just a reminder, our projections right here, these projections are estimates and projections that I was referring to there. So Domino's profits will continue to advance at a good clip, which on display. Okay, good. So we covered that. So let's go down to the commentary part of the report. Is right here in front of us. Focus on the commentary. Gallagher had the following to say about Domino's. This issue is untimely. Near-term investors should find better options elsewhere. First, equity's considerable run-up has discounted the company's growth prospects to 2019-2021. Thus, long-term investors may want to stay on the sidelines. All told, from a risk-reward standpoint, the research department suggests that our professional clients consider taking a position in Amgen, avoiding Domino's. So that concludes the recommendations of one stock to buy, one stock to avoid. The last thing I want to end off is, if you want to contact us in the future with questions or comments or anything, on ValueLinePro.com, right here is the questions and contact us section. Simply click on that and hit form where you either subscribe or click on contact us and submit a question of your choosing, and we'll get back to you as quickly as possible. So I want to thank you for attending today's professional webinar. Again, we host these monthly, so look for invites in the future on the different topics. If you're a current customer, thank you very much for your business. If you're a prospective customer, I hope I gave you a little insight into the part behind our research. So enjoy the rest of your day, and thank you again for attending.